right, good morning. Welcome to another week of volatility. Give me 1 second. Let me make sure that the YouTube members are also on board. Okay. And let's share that link. Okay. There we go. All right. Let's start with, let's go over here and go to dollar index. Now, you've seen how the market behaves, or the market has behaved since Monday on the dollar index. And this is one of the reasons why during the course of the week of NFP and FOMC, we don't want to do much because the market is going to move in a way that sometimes can be very hard to predict, right? So you can, Monday, I think we met on Tuesday. So Tuesday, with our live session, we did get exactly what we were looking for. We were expecting a reversal, so we did get that, and price went to the exact level that I gave. If you remember, I had these two levels, 105.61, and then the other one is 106.10, right? So we did get that, and then as soon as we hit it, price came back down, right, overnight, and then went back up again yesterday, and then came back down. So the market has not been really doing much since then, but nevertheless it's been tradable. But yesterday was a day that I personally want everybody to sit on their hands and not do anything, because by trying to do something, price might not continue in the direction of where you expected price to go to. Hence, we had what we had today. I think, okay, now this is based on experience, right? It's nothing to do with charts. It's based on experience. Most of the time, right, whenever we give the rate announcement like this, whenever the rate announcement comes out and we have such up and down movement, it creates a trading range that keeps price in a consolidation on the dollar index. Now let's go back to 2020. Let's go back to 2020, because I want you to see that going forward, what is the potential movement that can happen, right? So let's go to 2020. That was June. What's today's date? June 16th. Not 2021. It was 2020. My bad. Okay, here. In here, price created a trading range, and then we stayed in there for, I think, a couple of days in here. Okay, we stayed inside that range for a couple of days, and price did not move until we got to July. Let me play it forward. Until we got to July before the seasonal tendency for July kicked in, where we are bearish on dollar index, and then price started moving lower. Okay, so I want you to be careful with the dollar index right now, because the range that he has created now, it looks to me that we might stay in a consolidation. Okay, where it goes up, sorry, it goes down, comes up, goes down, comes up, it failed to continue, goes down, failed to continue, and then comes back up again. That is a trading range, and you don't want to be forcing a trade when we have such condition, right? So on the foreign currencies, the best option is to basically look for scalps. Okay, and the best scalps are going to happen above previous days highs and previous days lows, or during a session when price takes out a short-term low or price takes out a short-term high, until they show willingness to move away from what they have done here. So I told the VIP members to sit on their hands today and then wait till tomorrow. If today we push above yesterday's high, then we will consider a continuation to the upside. We will view this down candle here as a reaccumulation day, or they are buying more on that day. Okay, or if we trade down and close below, we close below this candle, that means we've come back inside this range here, right? We went above it, so if we close below that, then we've come back inside that range. Hence we can measure the range low to the range high, and then anticipate some measure of a pullback. Okay, so it's a wait and see scenario right now until the market shows its hands where it wants to go. All right, so be patient, don't do anything today regarding the foreign currencies, i.e. the majors. Okay, because it's gonna keep going up, down, up, down, up, down, and it might trick you into trying to pick the direction where price is supposed to go. Okay, so that's the narrative on the dollar index. So I'm on the sidelines waiting for more information how today is gonna close. So on the lower time frame, you will see, let's go to the 1 hour. Took out this low, took out this high, back to this low, now back inside the range again, and you can see currently it's trying to reject. So that's why I'm advising to sit on your hands and wait. Okay, on euro, we also have, I think euro has the potential to come back and attack this low. So this morning I was practicing, I'm not taking any trade, I was practicing to sell after we rejected that low, to sell and come and attack this low. The reason why I think that might be the case is that we run up in here, okay, run up, and then we broke down, breaking market structure. So all that happened during the announcement was pullback, and I'm expecting it to take out this low. Now I could be wrong, and then they can come all the way back up to clear this equal high. Okay, so that's why I'm not taking any trade, I'm just practicing. All right, until I get a clean direction what is supposed to do next. In my opinion, we should be attacking this low. That's, that's what I will go for. And we do also have this low here, right? If I was to pick a direction right now to take a trade, I'll be selling. Okay, but rules are rules. I want to respect that rules. I don't know, so I'm going, if I was to gamble, I'll gamble to the downside, so I'm going with that. Okay, and if it goes up, then obviously I don't have anything to lose because I'm not trading it. Okay. Pound, let's go on to the daily. It's also inside day. This high was not taken, this low was not taken, so price is stuck within previous days high and low. That can cause price to take out this high and then move lower. All right, so again, why I'm not touching it. On the H4, we do have this impulse leg, this retracement, so it could or it can go up and attack this equal high. So it actually conflicting with what Euro is trying to do, or it's opposite, right? Euro looks like it wants to go down, this one looks like it wants to go up, which will bring you to this pair, which that's the one that, you know, I'm expecting it to go and attack this low. So maybe the relationship between Euro and Pound gives you a trade on this to go and attack this low and that low. So that's the only trade that, you know, if I was to take a trade today on an account, that's the only one that I'll take. It actually went and took out, I missed the entry. If I was home, I would have taken this entry. This was the entry that I would have taken right there. Okay, that's the entry that I would have taken, but I was out. I went to drop my son off from school, and then when I came back, price was down here. Okay, I got back in at 9, no, this candle 9:15. That was the candle that was trading, but my real entry should have been here. But I think it's gonna attack this equal low here. Okay, and then attack this one, and I'm also seeing a potential market maker sell model, which starts from here and then here and here. So we could see it go and attack this low. So that's a target right there. But where it is now, this is the target. Okay, so if you do fancy that, then obviously you can look for a sell using either this order block here, or on the lower time frame, maybe it might offer you a fair value gap, and then you use that and continue going down, and then you just leave these two alone because it's conflicting. Okay, if I was to do anything, I'll probably maybe buy this. If I want to do anything on the majors, I'll buy this one because I'm anticipating Euro Pound to drop, and that will be strength for the pound. So I'll rather buy the pound to attack this equal high. Okay, so I'll do something like this. This will be the impulse leg, and I'll buy OTE like that and attack this equal high. Okay, so it's all practicing, no real money involved. Okay, just practice, and because it's FOMC week, you know, going into next week, something similar is gonna form, and then because you've practiced, it's easier for you to see it next time when it actually forms. All right, so that's that on the pound. New Zealand, I was looking at this again. It's conflicting thoughts. This one is like the euro. It looks like it wants to go and attack these lows here, right? Whilst this one is looking to go back and attack the high. So I'm not touching neither. I was practicing to see if this one can, let's go to 15 minutes, if this one can go and attack this equal low. Okay, I'm not taking any real trade on it, so you know, right? And then at the same time, you have this one traded back to the daily order block. This down candle traded back to it, and you can see it's rejecting. That's actually the breaker, and it's rejecting. So again, conflicting ideas, so I don't want to do anything with that. But if I was to do anything, I will look for the buy. Now watch this down candle. We are in London, so if it does create this as an order block, you can use it to go and attack this high. All right, if it closes above it, but do not trade it live. Okay, practice it. Do not trade it live. I don't like the condition. I don't trust this dollar. Okay, it can stay in that consolidation and mess around these pairs. Okay, so it's just going to be something that you can practice and not take real money trade on it. Okay, dollar CAD, that you can also do a sell on that one. On the H4 there is there's another block here, this one, and then we traded into a fair value gap, which is exactly what we look for. So we will expect price to come and attack this long. Again, not real trade. Okay, it's not real trade. It's something for you to practice. On the daily there is a fair value gap, and yeah, I'll just attack previous day's low and then I'll leave it. Okay, I'll attack this low. If I attack that, so I'll attack today's low and then I'll leave it. Okay, so on that we have maybe the next 10 minutes. If we close below that, you sell that with a stop above it, and then anticipate price coming to attack this low. That's probably about it. If it's gonna continue, great, that'll be fantastic, but partial, and then the rest you see how far it's gonna go. Okay, and we've just talked about this one. Once the 9 o'clock candle closes, you do have yourself a swing high, and you can use that to sell short, and I've already talked about what I'm seeing in here. Okay, gold, this one is a little bit confusing because of how the price structure in here is. So could you go back to euro? That's euro. And what do you want me to do on euro? What do you want me to do on euro? Okay, this and the low. All right, cool. Let's continue. I was saying that this one looks a little bit confusing because on the daily, the way prices kind of scattered everywhere. I don't like it. So we have a bearish order block here. We have a bullish order block here. So right, we are in a very tight trading range. We have a breaker here. We have a breaker there. But we do have a void in here. So maybe price might want to rebalance some of these gaps, right? So the mean threshold of this last up candle can be the target there. Now it's not high probability, okay? On the 1 hour time frame, there is a market maker buy model unfolding. Right, and we reverse down here and we've accumulated here. So I want to see, based on that, I want to see price probably trade here, and by that understanding, this auto block can provide support to send price up there. Now is it high probability? I would not take it, I would not trade it, but if I want to, then it will be a buy. I'll leave my stop. Let me see on the 15 minutes. Yeah, I'll probably leave my stop below here and then go for that. Okay, let me go into the 5 minutes and see. Yep, I'll leave my stop below that candle there just to cover this fair value gap or this void here, and then I'll attack that level up there. Okay, that's what I would do if I was to take any trade on this, but I'm not. So I know it might sound okay, why, if you know what it's going to do, why don't you take it? It's not that easy, straightforward, because if the condition, right, if the market condition is not high probability, right, all I can do is forecast it, and I don't have to necessarily be in it. I'll show you the trade I'm in, right? I'm in this one. I shared it over, I think, Monday. Was it Monday 13th? Yeah, on the 13th of, which was Monday. That's the one I'm in, and that one. Right, we talked about the yen pairs, that they are going to be dropping in discount. So those are the ones that I'm trading right now. I don't have any position on these ones. Okay. So yeah, it's not because I don't want to trade them. It's, you know, just me and what I feel like it's high probability. Okay. So that's gold. Let's go to oil. Oil, we talked about this on Tuesday. I think I shared that the draw on liquidity was inside here after we run above this high and then we broke down. That was the draw on liquidity. I got a trade in this yesterday during the New York session, and I did ride all the storm. That was my PDRA in the afternoon. Broke down, went short there, and my target was right here. It got there, started playing around, and then I closed it because I didn't want to sit through maybe if they wanted to go back up or not. But I know we're gonna continue going down, but you know, I prefer to be safe than to be sorry, so I just closed the trade, right? But I shared the direction with you. We were expecting price to come inside this from here. Okay, so on Tuesday when market tanked, I said they're gonna drop down here. So all I did was wait for price to give me an opportunity, and then I went short. Okay, so all you should see on the H4, let's go and use this one. This is the one, right? This imbalance in here. Let's put that one in the 1 hour. So on the H4, you can see that's the level we're looking for. Now, in my opinion, it can go lower than that. Let's go into the daily, so you can see why I think it can go lower than that. If you look, we made a high, we had a low with an with a down candle. Okay, so notice that from here we never traded through any down candle, right? We never traded through any down candle until yesterday. Okay, we never traded through any down candle until yesterday. So if that's the case, then market is going to seek lower prices. So now we should not see price straight through the up candles, and then we should see it continue going lower. All right, so we are expecting price to take out this low, take out this low. We'll probably trade somewhere down here. So what I'm looking for is basically optimal trade entry. All right, I'm looking for OTE on the weekly time frame. Actually, let's go to the monthly, it'll be clearer. On the monthly time frame, if you use the narrative that we use, right, it's a previous month high rated, drop down to the weekly. We have gone below this weekly low with that bay candle. So let me go back to the weekly, draw this line, and let's go down to the daily. That candle there, yesterday's candle, right? So we do have ourselves a potential move to go inside the monthly range, this high to this low. We're gonna look for imbalances within that. So on the weekly, we don't have any imbalance, right? So where is the liquidity going to be? It's going to be below the lows. On the daily, we don't have any imbalance, so liquidity is going to be below the low, and it might potentially take out, I'm not saying it's going to, but it can potentially take out the monthly low as well. But I don't look for that, I'll just look for 50% of that range that we have. %50 of that range will be here. Okay. So that's 50% of that range. That's where I will, sell. I'll continue to look for sales till we get there, and then once we get there, I'll see if I want to continue depending on how the daily keeps giving me the closing prices. If we keep closing bearish, then I'll probably look for continuation to optimal trade entry. So optimal trade entry will be here, here, and there. So you can see it actually brings you to where I said earlier, right? Somewhere in here. Okay, and then if you look at price properly, it's actually showing you a market maker sell model starting from here. We have this as accumulation, we have this as accumulation, and then we have that as accumulation, and then we break. So we've had this being the first distribution, so maybe it might pull back next week, not this week, next week it might pull back, and then we look for a sell. So next week will give you maybe Monday up for retracement, and then Tuesday we start anticipating a move back down again. Okay, so that's the business on oil. So let's see, I think we might drop all the way down here. Right, that's the draw on liquidity. Wait till New York session. Okay, now let me give you some times on this on oil to be trading, because oil, it does move during specific times of the day, which I've taken note of. So you know, our YouTube members, you can have that for free for today. Look at between 2 and 6. I'm sorry, 8. That time window, okay, between 2 and 6. Let's go here. 8, my bad, 8. Between 2 and 8, right? Between 2 and 8. Between 2 and 8, right? That's the time you want to trade oil. That day was 2 and 8. Notice how the big moves on oil are happening inside this time window. Okay, so that's the time you want to trade oil. So today, don't do anything, wait till 2 and 8. Okay, that time window, you're gonna hunt for a sell. Okay, so there you go. That's for free, you don't pay anything. But those in the VIP, you have the one on the indices. Today we're gonna hunt for that. All right, we know where it's going, so the time that I shared with you guys for the indices, you're gonna hunt for that. And what you also want to do is actually journal those time. Right, journal those time. Whenever it happens, just take a screenshot and put it there. Over time, it's going to be like clockwork for you, right? And then all you do is just sit there and wait till that time of the day, and you just jump on the screen and you know exactly what you're going to do. Okay, you know exactly what you're going to do. Let's go back here. So let's go put that on the daily. Bitcoin, we are looking for 20k and potentially 17k as well. We don't want to go through this because it is what it is. That's what we are expecting. That's what you want to look for. Okay. And Ethereum, you're looking for 766. Was it 766? Let me see. $769, right? That's where I think it's gonna go. So we are bearish until proven wrong. Okay, we are bearish until proven wrong. And pretty much that's it on these. Let's go on to the ones that I'm riding this morning. We just hit our TP1 on CAD, right? That's our TP1. TP2 is all the way down here. I'm gonna send out a message for them to take the TP1. How many pips is that? And 94 pips, not bad. Aussie yen, that's the draw on liquidity here. So New York session, if you do get yourself a sell, that's where you're going. And you know, I think yesterday I did a long analysis on these pairs. Okay, I did analysis on all the futures, and this is what I saw, that the yen has got potential to trade up here if we were able to close above this high. Okay, so if price was able to close above that high, then price was disposed to go all the way up here, right? And the other pairs will stay. Why would the other pairs stay? Because this one is overextended. I wanted them to take out this low first, but it didn't want to do that. So we will come to that. I was actually thinking about you. I was thinking about you yesterday when the rate announcement was out. I was thinking about your GA position, so I'll come to that. But you know, with what I'm showing you here, you really want to get yourself in a yen pair going forward. This one is also not bad. Let me talk about this first. They've just gone and attacked buy side liquidity and rejected right here. So we have a market maker sell model in this pair. So this has a potential to drop all the way down back to this high. So if you're not here by noon, if you're not here by New York session, okay, that's a potential trade for you. If you see it pulling back in New York session, you might want to get yourself a sell to come here, and then we might trade and close in this gap here as well. Okay, so we have a fair value gap, we have an auto block created. And that's the business. Oh, I'll say this one, because that's when it confirmed the swing high. And those of you that are in the private group, you know the business, right? The market open, if we are anticipating price to go down, that's exactly what we want to see. So here and then there. So New York session, if it does give you a pullback, you're looking to sell short. So that will give this pair to really drop. Okay, the Aussie yen, that's really going to drop. So I mean, where we are now, you don't want to be you don't want to be selling that, right? So wait for New York session. If New York session pulls back, then you can use that to get yourself into a trade to continue going down. Pound yen, we have actually got to the TP, so I wouldn't recommend taking this one. Let me check the euro pound. Okay, the euro pound, yeah, I wouldn't want to see it take out this high. I think it should come back down again. Go to the 5 minutes chart. Yeah, probably might trade back inside this imbalance and then go down again. So that will be strength for pound and weakness for euro. So I think euro has still got room to the downside, so maybe you might want to play the euro yen instead of the pound yen. Okay, so play the euro yen instead of the pound yen. Now this is a classic move and you might want to take note of it. When price is going in a specific direction, i.e. up or down, okay, let's use this one. With the market maker, one day is going to give you an opposite candle. What do I mean? We have up, 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 and then one down, and then we have up, 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 and then one down, and then we have up, 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 and then one down, and then we continue going, and then we have up, up, then one down, down, and then it continues. The same thing when we are going the opposite direction. So when it creates an up candle, the very next day, that's what you anticipate a sell to continue going down. Okay, so that's what the Aussie yen did. That's what this that's what this one also did, and that's what this one did with yesterday. That's what this one did, and that's what this one did, right? So that's why I've been bearish on all of them, because we have down, 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 redistribution, down, 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 and then if it gives another redistribution, you go in and then you keep selling. Okay, now I think there was announcement on this one, but Swiss and yen, they are currently both of them bullish. Okay, the seasonal tendency calls both of them to be bullish, so this one might stay sideways, so I will not do anything. But we did manage to get a decent trade out of it from Monday. I'm sorry, from Tuesday. So Tuesday we got a sell in here, TP1, TP2, and that paid off a nice 173 pips. And then this morning you can see I think there was an announcement and then they just shot up quickly. So this one, I don't think you should be focusing on this. Take it off, leave it alone, because it's two pairs that are going to be strong. If you look at Swiss and yen, right, they are two strong pairs. The main strength is going to be on yen, because yen is free. There's nothing in here, it's all a void, and we talked about it the last time that because it's all a void, it will just find it easier to continue going up. So I would recommend paying attention to the yen pairs, especially the ones that I have here. Okay, and then leave this one alone, even though I think it will go down, because if you look at the market structure. We do have resistance in here, whilst we don't have any resistance in there. So this one facing resistance and that one not facing resistance, this might go down, but you know, you don't want to be trading two strong pairs. If you use the yeah, that's what I talked about, EJ. If you use the FinViz, right, FINVZ, and you go on to performance, you will see that today you have the Swiss being the strongest and then the yen. So two strong pairs, you don't trade them, and then the rest you just trade them. Okay, so euro yen, we should see it continue going down. In my opinion, we will see probably all this wiped out and probably reversed. Okay, why do I think it might reverse? This is just, it's like a pump and dump, right? It went up too quick and it was just all up candles. 1 2 3 4 5 6 7 8 9 10, all up candles. 10 days, I think it will rebalance that, right? But we have reached a target level here, so I'll say wait till New York session. Don't chase it where it is now, because they've dropped significantly. Now it can continue. Now another it's not a hint, another price action hint that you might want to write down. Go and look at how price trades every Thursday. Okay, every Thursday there's going to be, whether up or down, there's going to be a large range day, whether up or down, right? Wednesday, Thursday, those 2 days, it's always going to be a large range day. Okay, take note of that. And over time, whenever you catch a trade in if you have a price direction and you catch a trade, expect Wednesday, Thursday to be the big move. Okay, so yesterday I hunted for a sell on that, and today I haven't taken any position. I left everything that I had from Monday. Monday, Tuesday, no trade. Wednesday, one trade, and then today no trade. Expecting today to be a big range day. Okay. All right. Any question? Let me go to the GA for you. BAUD. Okay. So I think the last time that we met, I said I want to see price go for this high, and on the H4 we had this auto block here, and I said we should stay above that in order for us to go here. All right, now let's say you you really want to know BTC. All right, I'll give you BTC in a second, but let's say this is what we're expecting, right? And we want to see price go up here. I know you are not in our camp, so this one might be hindsight, but if we are expecting price to go up, okay, now, okay, I'm just gonna show it to you. Okay, So you can, if you're expecting price to go up, the weekly range, the one thing that you need to understand is the weekly range. Okay. Think about the week like this. Okay, it's gonna open, it's gonna rally, it's gonna drop, and it's gonna close. Or it's gonna open, it's gonna open, it's gonna manipulate, it's gonna rally, it's gonna drop, and then it's gonna close. Think about the weekly range like that. Okay, this is something that if you don't understand, when the week starts and you see price moving, it can confuse you, and that's one of the things that actually it took time for me to, you know, come to terms with it, because when the week starts, right? No, to answer your question, no, I'm already taking my TP on that one. I showed you. I'm just answering a question. I'll come back to the GA in a second. My TP was exactly here, so it has taken me out. I'm gonna wait. If it pulls back, depending on where it does pull back, let's see, 16th, 15th. We've taken out yesterday's high, but I think maybe they will just drop it. If it goes up and it takes out a high, I'll sell again. If it comes back up here, I'll sell again. I'll leave my stop. Let me see. Let's say the news comes out. Okay, I'm playing devil's advocate right now. Let's say the news comes out, okay, and then it rallies and it comes here. Okay, I'll wait, maybe give it 5 minutes, 10, 15 minutes, and then I'll see, does it fade back down? Okay, so on the 5 minutes chart. So on the 5 minutes chart, if it goes above the high, let's say they run it all the way back up and it goes above the high, and then it creates an up candle, and then it closes back down like this, then I'll go short and give myself maybe let me see, there's an imbalance on there. Yeah, here. So this candle and that candle, I'll give myself that room, and then I want to ride it all the way back down again. Okay, so if they send it right back up to take out the high, I'll hunt for a swing high, give myself room above an imbalance, and then I'll ride it back down again. Okay, so I'm not gonna take any trade on that. My TP has been hit, so I'm happy with that. Same thing with the yen. My TP has been hit over here, right? But if the news comes out, whatever they do, one of them is gonna rally, one of them is gonna drop, because they are both opposite. If this, can see they send it into that level. If this goes up, right? If this goes up, then euro is gonna rally, pound is gonna drop. If this goes down, pound is gonna rally and euro is gonna drop, right? So whichever direction they take it, one of these is gonna do down and the other is gonna do up. The one that's up, I'll fade that one back down again, because I think that the yen is going to be strong. So there you go. Let's go here. just taking some partial profit over here. All right, let's go back to the GA. Okay, so what I was saying, you were on GA, by the way. Yes, I remember. We can use this one to it's the same thing. It's what we call the weekly profile, right? You need to know what kind of, you don't really even have to know, okay? That's the good thing. You don't need to know. When the week is trading, right? When the weekly candle is trading, there are certain criteria that you can use in order to, you might initially get it wrong, because that was the challenge for me, right? When the week starts, and that's when I started noticing it. When the week starts, right, you are going to pick a direction. Let's say with what I've shared in the past, if we close bullish, okay, let's look at this. How many minutes have I got? It's 10:30. My time is up anyway, but it's okay. Exactly. Not even that. But you will understand it with what I'm going to show you. When the week starts, right, this is how I started doing it. Okay, so it will help you. Relative to how the previous week ended. So if the previous week ended bullish, then obviously going into the following week I'm bullish, right? But what I did, or what I was doing, was as soon as the week starts, right, then I start looking for the buy, because I'm bullish. So what happens is when I buy it on Monday, it goes up a little bit and then it stops, and then Tuesday you see price go down. Okay, Tuesday you see price go down. And all of a sudden, by Wednesday, price will do something like this, and it will start coming back up. And then Thursday, and then Friday, right? So I got frustrated because by the end of the week, I'm right with my direction. Okay, my direction is right, but I got my initial trade wrong. Okay. So what you want to do, for now, maybe it might not look clear to you, but when the week is trading, pay attention to how Monday, Tuesday, Wednesday is trading. Okay? Compare it to the previous week. So on GJ, let's go to GJ again. Why did I wanted price to go up here? Did I want it to go up there to continue going up? No, because it was Monday, right, and we created that auto block and we had that equal high here. I was anticipating a run up here to form the high of the week and then break down and continue going lower, and the The reason is because if you go onto the weekly, we had this candle, okay, this candle close bearish, this candle pullback. So this is a pullback, and it's similar to what I shared with you on the yen page, right? It's similar to this. It's just that it's on a higher time frame, like this one here, this one. Okay, we close bearish. The following week, think about this as weekly ranges. Okay, we close bearish. The following week we go up, and then we go up one more time before we going down. Okay, so the idea is framed up from this candle here. Okay, this candle makes us bearish. These are all just pullbacks. So here on the weekly, think about that same thing. We have a down, down. This is just a pullback. So we opening up here. So what can happen? We're going to take out this high, and then we're going to expand to the downside. So that's the weekly profile. All right. So if that's the weekly profile, then you're going to anticipate price manipulating between Monday, Tuesday, Wednesday, and then expand to the downside. Now, the fact that it didn't do that here, right here. Now, if you don't have your charts like this, you probably will not see it. So you have Monday, Tuesday, and then on Tuesday, we took out Monday's high, and then price broke down. That is the sign. Okay, that is the sign that this has formed the high of the week. Okay, this has formed the high of the week. So your best trade is going to be today. Yesterday and today. But after we broke down here, that's your breaker. So you can sell short there. So the weekly expansion is supposed to be to the downside to go and attack this low. Okay. Now yesterday, this is what I wanted to see. I wanted them to pull back a little bit. So I shared a trade in our community for price to trade into this imbalance, and then I'll sell short for high of the high of yesterday. So I was anticipating the high of yesterday to form in here because they went above this auto block. So I was anticipating high of the day to form in here and then sell it down because the weekly range was looking to go lower. Okay, so let's go to the 1 hour time frame. In here, New York session, that's where I was expecting price to go and form the high of the day, and then we go lower again. So today, right, you're gonna anticipate because of the rate announcement, it's kind of something else, and anything can happen. But if not because of the rate announcement, then I will anticipate the high of the day forming somewhere up in here. Let me see on the H4. Yep, I will anticipate the high of the day forming somewhere up in here. Okay, and then I'll expect price to expand down to attack this low. Alright, so I don't know if there is, for those of you on YouTube, I don't know if there is any material that you can go and learn more about the weekly profile. You need to really understand the weekly profile if you want to trade and hold for some time, right? If you're day trading, then sometimes it's fine, but if you're going to hold trades more than a day or two, you need to understand the weekly profile so that wherever the week is expanding to, if you have insight of where price is going, you can hold on to that trade for where the weekly expansion is going to take place. Okay. All right. There you go. It didn't quite get to that level, but nevertheless it rejected. For the gentleman that wanted Bitcoin, we are looking for Bitcoin to continue going down to 20k. We didn't touch 20k yet. Okay, so this is also an example, right? The market is bearish and then they pull up. So what's gonna happen? It's just a pullback. So next day, it's a in a downtrend, it's a redistribution. So it's gonna take out previous day's low. I'm sorry, previous day's high. It's gonna break market structure and you're gonna go short. So right there, that was a perfect sell right here. And then you hunt for, you have equal lows in here and 20k. That's your trade. What time was it? 2 a.m. That's BTC. And it can drop because it was a redistribution day. You can project this. You can project this day to the downside. Project this day to the downside and see why I'm expecting 17k here. So 19,337, 18,410, and then 17,381. Right, those are potential downside objectives as well. That's BTC for you. Anything else? On the H4, would you on the H4 would that up candle be a breaker on GA? Let's go back to GA. Which one? This one is. The rest are all mitigation. This one is a mitigation block. That one is a breaker. That is a mitigation. For BTC daily, would it do a 50% pullback to 37k FVG? Let's go to BTC. BTC is get rid of that. So what I shared over here, okay, what I shared here, this is me. This is how I trade. Okay, on all time frames. This is how I trade. if you want to know how I trade, this is how I trade. I trade after liquidity has been taken, and then I follow the market to wherever the opposite side of the market on all time frames. So you can look at from monthly, weekly, daily, H4. So I can use that same strategy to trade every time frame. Okay, and I've just given you a trade plan. When liquidity is being purged, I look to trade the opposite direction, and then I trade institutional order flow until price gets to wherever it needs to get to. 37K FVG. Whoa. That's way up here now. No. Well, it can, but you know, I don't know who's gonna buy it up there. I wouldn't, so I don't know who's gonna buy it up there. There is a, you know, I'm not a crypto fan. I've never been a crypto fan anyway, but there is a friend of mine shared an image with me. Let me see if I can share it with you guys. Where was that image? Okay, it was here. Okay, Okay, let me share. Change the screen. There you go. This is the smart money. This is how smart money deals with the market, right? So we have smart money buying down here. Okay. Institutions, investors buying down here. And this is when the public get interested. And up here is the this is where those that have no idea about trading, this is where they get informed about what's going on. Okay, this is where those that don't have any idea about trading, this is where they get informed. So up here, your friendly neighborhood friend, maybe your wife or your girlfriend will start asking you, do you know about Bitcoin, or do you know anything, right? Once they start asking you about those questions, like I think it was my girlfriend, not my girlfriend, my wife, said, do you have Bitcoin? That was, I think, 2021. Yeah, she came back from work and was like, oh, my friends are talking about Bitcoin. I was like, okay, that's not good, right? Because the moment it goes public like that, that's the wrong time to be looking at that. Okay, so, you know, a word of advice, anytime you hear the public talking about something, don't go for it, because it's completely the opposite. Okay, if you hear the public talking about, especially when it comes to trading and investing, when public starts talking about it, the smart money is making it public for them to get out of their position. So if you look at it here, right, smart money bought down here, investors bought here. So now if they want to get out, they need the crowd on so that they can sell to them, because that's where they're going to get out. And if you turn it around, it's the same thing when we are in a bear market. Okay, so when you're in the bear market, price starts going down, it goes down, and then all of a sudden it becomes general knowledge. Everybody knows that. Yes, exactly. Everybody knows that something is going on with a particular asset. You do the opposite. Okay, so currently we are somewhere here. I'm sorry, we are somewhere here. Okay, that's the mean. We are somewhere here. Let me put the but look at where the mean is. Okay, take notice of the mean, where they've got the mean. All right, take notice of that. Take notice of the mean, and let's switch the screen back to the charts. Okay, so I'm gonna go on to the weekly time frame and I'm gonna put this indicator on. This is the mean, right? From here, that's where the investors started buying, or smart money started buying here. So we will be looking somewhere down here. That's where that 17,000 level that I'm talking about is. And then we will start seeing maybe some accumulation. Because now, trust me, anyone holding Bitcoin, it's either dead or they're trying to get out. Okay. I'm not saying they are physically dead, but you know, the account is gone. So smart money probably has got most of their positions out. If they sold up there, they got most of their positions out. So now they will start allowing price to start bouncing, so that they will start, you know, manipulating it to get people to people to sell. Let me choose my words carefully here. Let me get rid of it and then go to the daily. So what's going to happen down there is they are now going to look to buy it back up again. So how are they going to buy it? Price is going to bounce. People are going to buy it. It's going to go up. And they're going to push it down. So as it's going back down, okay, what is going to happen? Anyone that is holding it is going to sell. Now they buy that. Okay. Anyone that will sell going forward, that's where they're going to buy. And then it comes back up again. And then when it's going down, they're going to buy it. And it's going to, so what will happen is basically accumulation of loans. Right? And then once they've got enough, then boom, it pops up again. Look at the yen. This one will give you a rough idea. Right, look at, okay, I think, when was it? I saw it in the newspapers. It was in newspapers. I think it was on Forex Factory. There was a news showing, oh, yen is in 24-year low. I think I was reading it yesterday. 24-year low. So what is going to happen? People are going to start buying it. And then this is what's going on. They buy it, and then it goes down. Price going down, people are going to sell it, and then they're going to buy it off from them. Going down, they're going to buy it off from them. And here, lots of people are going to buy it, and boom. So as it's going down, they're going to close their trades, and then they're going to accumulate that, and then all of a sudden, boom. Okay, so that's what might happen to Bitcoin. Okay. I think we've got a bounce off from something. Give me 1 second, guys. I need to take some profits off my yen pairs again. I'll sell again during the New York session. You can hear me doing tick 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 because I have a trade on all the yen pairs. Okay, just now when you are talking about mitigation blocks, I find myself always stuck in those trades. I need to find a way to prevent that. You might want to study the market maker buy and sell model. If you go onto YouTube, go on to obviously the author of all this, my mentor ICT. If you go onto his YouTube, you will see you see that there's a couple of lessons on market maker buy and sell model. You want to sell that. You want to study that, and then also study the weekly profiles. Once you have those two, right, it will give you ideas on when to sell or buy mitigation blocks, right? When the trend is moving, price is gonna generally retrace back to mitigation levels. That's when you take trades. Let's go to this. Oops. Undo. Remove this drawing. Okay, so when price is going down, what will be mitigation blocks like this? That. Okay, and then that. Those are mitigation. So when price trades back into them relative to time of the day, then you can use them for trade ideas. How's your FTMO going? I passed it and I am doing the first one that I did was the trial. I did the trial. I'm currently doing the actual one, the proper one. I've passed the trial, so I'm doing the proper one, and I am up 2%. I think I did 4 trades, and I'm up 2%. Which time frame should I focus on to generate bias when trading 15 minutes and 5 minutes chart? You should look at the daily first. Know where the daily is going. Know where the H4 is going. And then you use the H4 direction as your trading range. And you can then use the 5 and 15 minutes. No, I'm using everything. What I said with you guys it's let me put it this way. I am a creator. I like creating strategies. So if I see something that is high probability, I prove that it does work. Okay, I prove that it does work, and because I'm always doing this, anyone can pick it up and then run with it, right? So the proving of it working is the one I used to pass the FTMO, the trial. Okay, but when it comes to my personal trading, I told you earlier, my trading is I wait for liquidity to be purged, and I trade in the direction using order flow, and it's on all time frames. So the H4, if I see it, I'll trade it because I understand it, but it's not the only thing I'm going to use to trade. Okay, it's just to, it's what's the word, it's myopic in terms of my knowledge. It's just too small, if you get what I mean. No disrespect, right? I know a lot about price action, so I wouldn't just use that for my trading strategy. That would be just too myopic. Are you on socials? I am on Telegram. I don't do socials much, I am very reserved. I'm trying to be on YouTube, so I'm trying to raise I'm trying to be on YouTube, right? So yeah, I am trying to be on my YouTube. I have my YouTube channel, and I'm trying to, grow that YouTube account basically. So that's where you're gonna find me most, and Telegram, and then here. So you normally enter after the purge? Yes, I enter after the purge. Let me take you to Euro Pound, like this one here, right? Yesterday we did this live on my YouTube. You find Institute Trader. That's me. Yesterday we took one here after the purge, right here. That was the trade, and we targeted this imbalance in here. Okay, of course we could have gone all the way down to this, but I gave it there. And then this morning I told you, if I was not dropping my son off from school, that was a purge. Yeah, that's the part. Understanding the purge, that's the part that unfortunately I can't teach you that, right? That's my personal strategy, so I can't teach you that. If you want to learn, then you have to join the VIP members. They have a lot of advantage over you guys on YouTube. But doing this, I've given you quite a lot. I spell it out for you, but I don't show you. We just did this one, right? I said it's gonna trade up in here, and it's gonna go down. How did I know that? It's based on my strategy, so I know. It's not like I know, but it's a high probability price is going to do that. So I'll bet on that. Yeah, it's one of those things you have to find. You have to find a way to understand the purge. This one or GU? I didn't say GU. GU, I said if I was to trade it, I'll go for the equal high. Okay. Why would I go for the equal high? Because they've already purged liquidity down here. Right? They've purged liquidity down here and down here, and we've traded into this imbalance. So it makes sense that price is gonna potentially bounce. Right? It makes sense that price is potentially going to bounce. So if I was going to trade the news, I would trade it to the upside to attack this equal high. That's why you can see that was a nice entry as well. Yeah, that was a nice entry. That is why I was telling you this one is going to go down to allow British pound to go up. Right? Okay, it's gone past 11. So I've been here 1 hour 30 minutes. Is it 1 hour? Yeah, 1 hour 30 minutes. Any more questions before I sign out? Thank you. Nasdaq, they are bearish. We had a redistribution day. So we're gonna continue in that direction. The draw on liquidity is here. So the next one, they've gone through this imbalance, so the next one will be down here. I think we might get that today, by end of the week probably we will see this low taken. Right, we have actually, nope, right there. Right, we drop down, so New York session might pull back, and then I'll expect price to continue going down to attack this low. So if New York session pulls back, right, if it pulls back, I'll look for let's go to the H4, somewhere here. If they go that far, probably might not. Yeah, it probably might not. See if they can get up there. Yeah, if they can get up there, then I'll look for swing high to form, and then I'll come and attack this and that for today, and then maybe tomorrow. If I don't know if there's news, let me double check for later. There's no high impact news, because if there is news, because it's Thursday, I would like to see them take out, run all the way back up to take out this high, and then come back down again. But that's not the case, so I'll watch here. We'll look for optimal trade entry for New York session. The red news, every red news is important, and the medium impact news, the yellow ones are also important. I don't pay attention to the green ones or the blue ones. I don't know what color they are. I don't even look at them. I look at just the red ones and the yellow ones. Is it yellow? No, that's not the yellow one. Hang on. Orange ones. Okay, so it's red, orange, and yellow, gray. I don't have the yellow and gray activated. I only have the red and orange ones activated. But for our VIP members, we'll be looking at this pair same time today, so make sure you highlight that time, and then when we get there you start hunting for your setup. Let's look at Euro Pound. Okay, Euro Pound just smacked down to that equal low. Okay, so I'm just gonna close with this, right? I'm gonna close with this. Okay, so this is when the day closed yesterday. So think about this as the weekly range, right? This is where the market opened and then it went up. So in a weekly range, right, this can be Monday, Tuesday, Wednesday. Okay, this can be Monday, Tuesday, Wednesday, and then this happens on, let's say, Tuesday or Wednesday, depending. That's the criteria you're looking for. Now it will get to maybe time, but if you study it well, it will get to time that you might understand where this high is going to form. Initially you're not going to understand it, but over time you're going to understand where this high is going to form. So I could have gone short up here, right? But I missed that. So where was my potential second entry? Here, because that was when the market broke down. So I don't have to be in here, I can go in there. So if you're trading this as the weekly range, then Tuesday by New York session, if you see this price action, right, then it gives you the opportunity to go short during the New York session, the Wednesday and the Thursday. And mostly you're going to see a big range. If it happens on Tuesday, you're going to see a big range on Wednesday and Thursday. All right, so I'm going to close with this. Hopefully you understand, and GU is going to go for that. That one is staying down. Okay, so thank you all for joining me for today. I'll see you guys on YouTube on Tuesday, and for those of you VIP members, I'll see you at 2. All right, so have a wonderful day, and stay blessed, and I'll see you guys. Peace.